Bitcoin to $500,000? Crypto experts reveal shocking price predictions and market trends you won't want to miss. Could a rate cut send Bitcoin skyrocketing? Plus, learn about the housing crisis, a new Bitcoin wallet, and which altcoins whales are secretly buying. In the latest video from Altcoin Daily, the host discusses Chamath Palihapitiya's Bitcoin price prediction of over $500,000 by October 2025. This prediction, made a year ago after the Bitcoin halving, is based on historical price patterns and the increasing commercialization of Bitcoin through ETFs. The host also talks about current market conditions, pointing out the high amount of money, $7.4 trillion, currently held in money market funds due to high interest rates. He suggests that if the Federal Reserve cuts interest rates, this money could flow into the equity markets and potentially Bitcoin, driving prices up. He notes that global M2 money supply is already increasing as other countries have started easing monetary policy, hinting that Bitcoin might still have room to grow. I find it interesting how Chamath's prediction from a year ago is being revisited now. The market dynamics discussed, especially the huge sums in money market funds and the potential impact of interest rate cuts, do make one think about where all that money might go if rates fall. It seems like the connection between a potential rate cut, increased money flow into markets, and Bitcoin's price appreciation is the central idea here. In the latest video from Crypto Rover, he discusses his $400,000 profit on an Ethereum trade, predicting further gains due to a bull flag pattern forming on Bitcoin. He anticipates Bitcoin reaching $135,000 and Ethereum outperforming it, outlining his trading strategy with target points of $2,600 and $3,000 for ETH, where he'll partially and fully exit his leverage position, respectively. He notes heavy accumulation in Ethereum across various metrics, suggesting a continued upward trend, potentially netting him over $3 million. He cites similarities with previous consolidation phases and points to rising M2 money supply, NASDAQ, and S&P 500 performance as supporting indicators for a bullish market. He mentions a $200 million Bitcoin short positions currently at the $9,000 level. While Crypto Rover's optimism is understandable given current market trends, predicting such specific price targets, especially in the volatile crypto market, needs to be taken with caution. News sources show institutional investment in Bitcoin is growing, which can be a positive sign, but regulatory uncertainties remain a key factor that could influence price in either direction. The current market is being driven by spot ETF applications. BlackRock's application sparked off the rally, and now all eyes are on the SEC for approval or rejection of these spot ETF applications. The market seems to have priced in some likelihood of approval already, as evidenced by recent prices. Further delay in the SEC's decisions or any potential rejection could lead to a significant market correction. In the latest video from Lark Davis, he discusses how whales and institutions are quietly accumulating altcoins in anticipation of the next bull run. He points out the increasing number of spot ETF filings for altcoins like Solana, Dogecoin, XRP, and Litecoin, indicating a potential influx of billions of dollars. He also talks about companies adding Bitcoin and other cryptocurrencies such as Ethereum and Solana to their balance sheets, following MicroStrategy's successful Bitcoin strategy. Lark explores other emerging narratives like real-world assets, RWA, with projects like Plume and Maple Finance gaining traction, and the rise of AI agents in gaming and entertainment, exemplified by Virtual Protocol. Lastly, he mentions the resurgence of DeFi, highlighting projects like Camino Finance, MakerDAO, Jupiter, and Aerodrome Finance. He predicts these narratives will shape the crypto space over the next 12 months. I find Lark's analysis quite insightful, especially regarding the increasing institutional interest in crypto through ETFs and treasury holdings. While the influx of institutional money could boost the crypto market, it's important to remember that market volatility remains a significant risk. The comparison of AI agents to meme coins is intriguing, highlighting the speculative nature of these new assets. While DeFi shows promise, it's crucial to be selective about projects, given the varying levels of quality and tokenomics. Overall, the video provides a good overview of potential future trends in crypto, but it's essential to do your own research and not solely rely on these predictions. In the latest video from Ben Cowan, we get an update on Bitcoin's bull market support band. Bitcoin saw a 7% rise last week, landing around $108,000 to $109,000. The bull market support band, based on the 20-week SMA and 21-week EMA, is between $95,600 and $98,400. Ben notes the 50-week SMA has been a better indicator, with Bitcoin dipping below the bull market support band in Q3 of the past 2 years in Q1 2025. Will Q3 2025 follow the same pattern? Ben discusses the 50-week SMA's significance as support, highlighting that its break will put the bull market's strength into question. He references around $86,000 as the 50-week SMA and suggests future pullbacks could still lead to higher highs if this level holds. He also touches on the 200-week SMA crossing the prior all-time highs as a potential indicator, similar to previous cycles. Ben ends by discussing upcoming economic data and its potential impact on Bitcoin's price, pointing out the market needs a reason to go down and that low unemployment and inflation figures could drive Bitcoin upward. Ben Cowan consistently provides thoughtful analysis of Bitcoin's price action. His emphasis on the 50-week SMA is particularly interesting, especially in light of recent market volatility. It's true that historical trends don't guarantee future performance, but recognizing these patterns can offer valuable insights. The current macroeconomic environment, however, throws in several curveballs with fluctuating interest rates and global uncertainty. This makes Bitcoin's price trajectory even harder to predict than usual, despite technical analysis. In the latest video from Coin Bureau, Nick discusses the ongoing housing market crisis. Unlike the 2008 crash, the current situation is more of a slow burn, driven by high mortgage rates hovering around 7% and record high median home prices at $414,000. This makes home ownership unaffordable for nearly 75% of U.S. households. The locking effect is keeping homeowners with sub-6% mortgage rates from selling, further constricting supply. New construction is slowing due to high material costs, labor shortages, and builder hesitancy. Baby boomers are making all-cash offers, outcompeting first-time buyers and smaller investors who are targeting entry-level properties. The video also touches upon rising mortgage delinquencies and foreclosures, especially in overheated markets like Florida. Commercial real estate is also struggling, with a $957 billion debt wall looming, potentially impacting regional banks and the wider economy. Similar issues are seen in Canada, the UK, and Australia, with high household debt, cost of living crises, and policy-driven investor prioritization exacerbating the problems. I think the video makes a strong point about how different this housing crisis is compared to 2008. Recent news articles about rising inflation and the Fed's continued hawkish stance on interest rate hikes seem to back up the idea that mortgage rates will stay high. The focus on the locking effect is interesting too. It makes sense that people wouldn't want to give up their low mortgage rates in the current environment, which just makes it harder for first-time buyers. The comparison to a subscription service like Netflix is a bit extreme, but it highlights the growing concern about housing affordability for younger generations. In the latest video from Crypto's Russ, George discusses Bitcoin's steady price, around $107,500, anticipating its upward movement. He mentions the Genius Bill's potential impact on stablecoins and the market, highlighting its accelerated push. George observes a momentum shift towards Solana and Sway, attributing it to the meme coin Pangu's surge and a trader's repositioning from Bitcoin and ETH. He believes Solana is undervalued and predicts a recovery by year-end. Additionally, George shares his landscaping frustrations, detailing issues with sprinkler heads and broken pipes caused by his landscapers. He also recommends watching his Ask George video, where he answers questions about OTC markets, profit-taking, and stablecoins. While the crypto market analysis is interesting, I find the landscaping mishap relatable. Home improvement projects can be a nightmare, especially in extreme heat. It's frustrating when contractors don't communicate or take responsibility for errors. Based on recent news, the crypto market seems volatile, and regulatory developments like the Genius Bill could significantly impact stablecoins and related projects. It will be interesting to see how these factors influence Solana and Sway's performance in the coming months. In the latest video from Crypto Banter, the host reviews the BitKey Bitcoin wallet, emphasizing its multi-signature recovery feature. This wallet, created by Jack Dorsey and Block, splits keys between the mobile device, the hardware device, and BitKey's service requiring 2 out of 3 for transactions. The video demonstrates setup, including adding trusted contacts for recovery, buying Bitcoin directly within the app, setting spending limits, adding fingerprints, and the inheritance function. The host showcases the recovery process by simulating a lost device and restoring the wallet to a new BitKey device after a 7-day waiting period. The BitKey hardware device is available for $150. Multi-signature wallets seem pretty good for security, dividing the responsibility like that. It reminds me of how some safety deposit boxes need 2 keys to open, one held by the bank and one by the customer. This shared control is good, but makes me think, how much do I trust a third party holding a piece of this? There's a balance to strike between ease of recovery and third-party risk. Jack Dorsey's involvement definitely adds credibility to the project, but I think the long-term success depends on widespread adoption and trust in this multi-signature system. The inheritance feature is a clever solution to a common problem in the crypto world, ensuring your assets can be passed on securely. In the latest video from Crypto Casey, Bitcoin's price is linked to the global money supply, M2. A rare signal observed in 2017 and 2020 suggests Bitcoin's price could see exponential growth as the money supply expands. Projections from Julian Bid show a potential breakout, with Bitcoin possibly lagging behind M2 growth by 12 weeks. A Bitcoin price breakout is anticipated around August/September 2024, followed by an altcoin season. Bitcoin price predictions range from $128,000 8x to $320,000 20x, based on previous cycles multipliers and $16,000 bottom price in 2022, but this cycle's institutional investment and nation-state adoption could push it higher. I find the correlation between Bitcoin price and M2 interesting. While the M2 theory seems reasonable, relying solely on one indicator can be risky in such a volatile market like crypto. Numerous other factors impact Bitcoin's price, and unexpected events can disrupt even the most reliable trends. Recent Bitcoin halving event and its potential impact on price should be considered too. It is better to avoid predictions, especially in the crypto market.